talking about what's going on in the economy and the world of like the new.
About the Wall Street people.
Oh yeah,
you
big
can
time.
give them a huge hard time.
I talk to them about being like a group of junkies who've relapsed, going, listen, man, I just need some liquidity. You know what I'm saying? I just ran into some bad subprime. You know, we just had complex formulas. We just didn't factor in greed and panic. You know, I just need $805 billion by Tuesday. Yeah, no, seriously. No, I would not screw you again. It's pretty crazy.
I've learned my lesson.
No, baby, this is not like the other time. Seriously, just throw me a bad here, baby. Help me out.
Just give me a little bit.
Yeah, just a taste. That's all I need is a taste. I need $2.5 trillion. I'll pay you back.
Get me through 1 week.
Yeah, it's like they're going to print out a new $20 bill. The new Geithner $20 bill will be, instead of "In God We Trust," it'll just say "Trust me," and it'll be the little man from Monopoly going like this.
Welcome, Bitcoin friends. It's Bitcoin Mamo. So we're going to look at the Bitcoin charts, do some TA. We'll look at various time frames, and we'll also take a look at market cipher. So we're just going to start by looking at Bitcoin over the last 10 years here. These white lines are the halvening dates. The next halvening will be around April of next year, and that's in about 12 months' time. So I've just marked out this current candle 12 months before the halvening, just comparing it to the two previous cycles. We can see 12 months before the halvening back in 2019, we did have this strong rally off the bear market low, and then we did spend a year and a bit consolidating before seeing the explosive part of the bull run. In the previous cycle, we were still consolidating at the lows here, and it wasn't until about 9 months before that halvening date that we started taking off. So it does look more similar to the previous cycle here, where we are getting this nice rally off the bear market lows, currently with an approximate doubling of the price from these lows. But just wanted to take a quick look at that just to get some perspective of where we are in that 4-year cycle. And I do have the cycles marked out here, just going from peak to peak, and these are approximately 4-year time frames. But looking at the US stock market now, this is the S&P 500 futures chart. And we are on the weekly time scale. We can see during this current week, we have had a decent red candle here so far. But we'll have to see how this candle closes. And it looks like we are getting some resistance still at that 0.5 fib here, looking at the overall retracement from the all-time high to the low here. And this is where we approximately got rejected on these previous attempts higher. And we do see this is where the most amount of volume has been traded, around this 0.5 fib. This is the VPVR tool, just shows the amount of volume at certain price levels. We are also in this possible rising wedge here, although we do have 2 touches on the bottom, but only 1 touch on the top. And we do count these as alternating touches. So 1 on the bottom, 1 on the top, second one on the bottom. And now we're looking for that second one on the top. Generally with these rising wedges, we get 2 alternating touches on both sides. And then on the third touch, we generally break bearish. And the first target would be down here from this pullback. But that doesn't mean we can't break bullish from this rising wedge. It's just more likely to break bearish. But again, we're still looking for this second touch point on the upside to confirm this pattern. The other thing I'm looking at here is looking at the RSI. We also have a bit of a rising wedge pattern here. And we do have several touches on the top and the bottom. We can use these same patterns that are on the chart on the RSI, and sometimes it gives us an early indication of breaking that pattern. So we can also look at the RSI here to see if we do break this falling wedge first on the RSI as an early indication that we're going to break it on the chart also. And switching to the 3-week time frame now, this is where these order blocks are relevant that are drawn in. These order blocks come from a break in a trend, a single red candle surrounded by green candles, or a single green candle surrounded by red candles. It's a break in a trend. Time was spent here and therefore volume. These areas become of interest later on when we interact with them, acting as support or resistance levels. We can see this order block has been acting as resistance here. We did close above it on the previous week, but in the last video, I did mention I want to see us also close above this block here on the VPVR, and we weren't able to do that. So we are still pretty much stuck between these 2 order blocks in this range, and also between these 2 spikes on the VPVR. And we do open a new 3-week candle at the start of next week. So we'll have to see if we do close below this order block. We are quite close to the bottom of it. If we do close below it, then perhaps it increases the likelihood that we come down to this lower order block, which would also mean we possibly break this rising wedge pattern. But we'll have to see how that closes. So let's move on to Bitcoin now. We're looking at the 5-day chart. I think this timescale is quite good when looking at order blocks. We do see we have these two order blocks from these green candles, and we did get above this order block, but then closed back below it, so it didn't act as support. Now we have come down to these two order blocks in here from both of these red candles in an uptrend. We can see how this has been acting as support on all these pullbacks. We do see wicks to the downside here. So people are buying up Bitcoin whenever it does fall below these order blocks. The other thing to note is we do have two order blocks down here, and that did pretty much capture the bottom of the bear market exactly. And those order blocks actually come from way back. One here in October of 2020 from that red candle in an uptrend, and one from all the way back at the end of 2017 from this green candle in a downtrend. So the 5-day time frame does seem quite good with these order blocks. We saw support here from some order blocks. And if we go to the daily or lower time frames, we do end up getting quite a lot of order blocks, and it can get quite messy. The other thing we're looking at here is we do have this head and shoulders pattern at the bottom of the bear market. We see the left shoulder here, the head, and the right shoulder, which needs to be higher up than the left shoulder. And of course, the neckline just connecting these highs. And we did close above that head and shoulders pattern. And we look at the measured move. It is basically the length from the bottom of the head to the neckline. And then we put it at the breakout point where the neckline is, and the measured move gives us a target of 35,000. Now the other thing to note is if we do a fib extension here, taking it from the high here down to the bottom of the bear market, we do see that 2 times fib extension is at 35k, in line with where the measured move is. So there's some confluence with that. And if we actually go back 2 cycles here, this was the 2014-15 bear market and a 2015-16 bull run here. But just looking at the bottoming pattern here, what we did back then, we did spend a long time down the bottom here consolidating like we did at the bottom of our current bear market. But if we do the fib extension, the same as we looked with our current cycle, taking it from the high to the low here, we see that 2 times fib extension does pretty much capture the top here of this run. And then we did spend a lot of time consolidating here with some decent pullbacks. So again, coming back to our current cycle, we see that 2 times fib extension, and it does line up with the measured move of the head and shoulders. So I think this is definitely a target here. And when we do get up to this area, I think we spend a long time consolidating in a range. Now, whether we go straight up to that target or we have a pullback and then go up to that target, either is possible here. I'm still thinking we do have a pullback at least to 25k and retest the top of this head and shoulders pattern, where previous resistance can turn into new support, but either is possible here. And just looking at the fib retracement levels here on a possible pullback, we take it from the overall low to the high here. We have the 382 fib and the 0.5 fib. We can also do the fib retracement levels, taking it from this low, and we see that gives us the 0.5 fib and the golden pocket here. We do see a bit of confluence with the 0.5 fib lining up with that 382 fib, and that's around that 25k area, which is where the neckline is on this head and shoulders. We also have a little bit of confluence here, down here at the 0.5 fib and the golden pocket. So these are the 2 possible targets I would be looking at on a pullback. And if we are going to have that pullback, the first step we would need to see is for us to close one of these 5-day candles below these order blocks, which would be below approximately 28,000. And again, if we go back to that previous cycle we looked at before and look at a similar thing with the fib levels here, on this occasion, we see confluence between the 382 fib and the golden pocket. And the 382 fib comes from the overall low here to the top of this rally, and the golden pocket here comes from this low after the pullback to the top of that rally. And we see there was confluence with these fibs in a similar area, and this is where we pulled back to on this pullback. And this was a 25% pullback from this high. And we see if we were to do a 25% pullback from this high, it would take us down to around that 23.2K area, where we do have confluence with the 0.5 fib and the golden pocket. So just something I'm looking out for. Again, I think we could go higher and then have that bigger pullback, or we could have the pullback first and then go higher and reach this target. And again, we need to see some confirmations, firstly closing below these order blocks on the 5-day time frame to increase the likelihood of a bigger pullback. The other thing we can note is just taking the measured move here from this low to this high. If we were to pull back down to this area, that 25% pullback, and then do an AB equals CD pattern, just using the same measured move, we would see from that pullback, if we then went higher, that measured move would be approximately in line with that 2 fib extension also. So it is looking a bit further ahead, but just looking for confluence with different techniques here. We can also add in this parallel channel, just connecting the lows here and this high. We did break above it, and we have been holding it as support on these pullbacks. If we do start to spend time back inside this channel, that would also increase the likelihood that we do get more of a pullback here. We do see the bottom of this main channel here connecting the overall lows, that it does interact with this level, the 0.5 fib and the golden pocket area, sometime around from the 21st of May till the end of the month. But going down to the 3-week time frame now, and I've just got pulled up the VPVR here, just to show you that there is this gap here, and when there is a gap here, sometimes we can have a quick drop to where there is support. VPVR drops off below 27.3K. So if we do start coming down into these areas, we could possibly see a quick drop down to around that 25K area, possibly down to 23.4 as we spoke about. I do have this other trend line here. It looks like it's acting as resistance. Where has that trend line come from? If we look at the overall price data here, basically we're just connecting this high and this high. We did break above it, but closed back below it. And now we're coming back up to retest this trend line. But this could possibly be acting as resistance on price, and we could possibly get squeezed between both of these trend lines here. After a pullback, we spend some time in this range before breaking out. We could also break above this trend line and come back to test it as support and then move to the upside. But for the time being, it does look like it's acting as resistance. The 2-week time frame now, we do close this 2-week candle at the end of the week. We also see that same trend line drawn in on the 2-week time frame. And if we were to get that pullback to these areas we spoke about, we do have an order block down here, starting at around 23.5K, going down to 22.3K. And this is also where that volume on the VPVR starts to really kick in. And going down to the weekly time frame now, everything else is the same. We do have that trend line coming down here. We can see we just closed slightly above it here, but we have come back down, and it does seem to be acting as resistance, even looking at it with these weekly candles. Looking at the RSI, we do have a couple of trend lines drawn in here. We have one here just connecting these lows, and we did see we did close below that trend line. So generally that means more of a downside move coming. And this did happen on this red candle where we did engulf the previous bullish candle. So this does lean in the favor of more downside to come. We do have an overall trend line here connecting the overall lows on the RSI. I don't think we come all the way down to touch this trend line. We spoke about that in the previous video, looking at the fractal from 2 cycles ago, where we did come down to about the mid-range and continued higher. Eventually we did come to this trend line, but it was much later on. And we also see the stochastic RSI is coming down here. We have closed below the 80 level here, which is where these dotted lines are. Generally, when we do close back below this area, it does indicate a more continuation. We see previously we bounced off that 80 area and continued higher, but we have closed below it, and we have also broken this trend line. So there are more things in favor here to say that we are going to have more of a downside move. Perhaps we need to see this weekly stochastic RSI come all the way down and bottom out before we get that next bounce to new highs. We can also look at the weekly EMA ribbon. This is a collection of exponential moving averages. Generally, we spend the whole bear market below the EMA ribbon. We did go above it slightly here, but we generally look for a whole candle to close above it, including the wicks. We did still touch the ribbon here, but generally in bear markets, we get rejected of this ribbon. And generally, once we break back above that ribbon, it does indicate the bottom is in. And if we are able to stay above the ribbon long enough, we then need to see the ribbon flip. So this yellow smaller moving average gets above the red higher moving average. And once that happens, generally on pullbacks, increases the likelihood that it will hold as support. And we can see that going back to that cycle we looked at previously, 2014 to 15, 16 here. Once we broke above the EMA ribbon on the weekly time frame, the ribbon flipped, so the yellow came to the top of the ribbon, and then on these pullbacks, it acted as support all the way up in the bull market. So the bottom of the ribbon is currently sitting at around 24.7k. And again, we don't want to see a whole candle, including the wicks, go below the ribbon, as that will flip to more of a bearish bias. But I think we can come down into the ribbon, even a wick down to these lower areas where we looked at some possible targets between that 23k and 25k, but still hold the ribbon as support. But we'll have to see how this plays out over the coming weeks here. And just going down to the daily time frame now, looking at our more immediate price action, we've still got this trend line drawn in, connecting these highs here. And the fib levels are also all the same. And I do have some of the daily order blocks drawn in, not all of them, some that I thought were more significant than others. But again, I'll be looking at that 5-day chart for order blocks, as I think it's more reliable and there's less order blocks there. But we do have a trend line here, just connecting the overall lows. And then we do have a trend line connecting the overall highs here. And this is that main trend line we talked about, which is possibly acting as a resistance. We can see on the daily, we have closed above it a couple of times, but then dipped back down. So it does still look like it's an area acting as resistance. We do also have another pattern here, a possible head and shoulders pattern. We do see we have the left shoulder here, the head, and the right shoulder. And for us to complete this pattern, we would need to close below around 27.2k. And again, taking the measured move from the top of the head to the neckline, putting it at the breakdown level, we see it would give us a target down here at about 23.2k, which is where we have those fib levels, the 0.5 fib and the golden pocket level. Again, using these two different low points as the starting point for these retracements. And we also notice if we pull back up the VPVR, pretty much it starts dropping off here at around 27.2, which would coincide with completing this head and shoulders pattern here. We see it does drop off significantly until we get down to 25k. And that measured move of the head and shoulders does correspond with the biggest spike here on the VPVR down at 23k. So we have to see if this does play out. I think it's more likely that we do break down here and at least test 25k with possible targets down to 23k. And then I think we just spend some time at the bottom here as the indicators cool off. But then I do think we have more moves to the upside to eventually complete that bigger head and shoulders pattern that we talked about, which has a measured move back up to 35k. And the final thing on the daily time frame here, if we pull up the RSI, we do have a couple of trend lines drawn in, one just connecting the highs here, and one that does connect the lows going back all the way to June. We do see 3 touch points here, and I do think we need to come down to this trend line to completely cool off before we see the next big move to the upside. And again, if we are able to break to the upside and break above this trend line, then I would switch that bias to the upside. We also see the stochastic RSI still coming up here. So perhaps we spend a few more days here around these levels. But if we do start coming back down, then I think we may see the completion of this head and shoulders move and that bigger move down to 23 to 25k. And if we do that, I think we will come down to this bottom trend line on the RSI and get support off that trend line. And we'll have to see where the price is if we do come down once we touch the bottom of this trend line. And looking at market cipher now, we have those same trend lines drawn in and also those fib levels here with those two levels we're looking at for possible targets of a pullback. But we're looking here at the 9-day time frame. This is something we've been talking about in previous videos. I mentioned I'm looking for a red dot on the 9-day time frame. If that does get confirmed, then I do expect that we do have this pullback and we do spend some time here consolidating on this pullback before seeing the next move higher. And we did look at the 9-day time frame because it was the most clear. If we go below the 9-day, say even to the 8-day, see green and red dots and it's a bit choppy. But on the 9-day time frame, just looking back at the two previous cycles, we can see in the 2019 bull run here, we came off the bear market lows after this 9-day green dot, and we came all the way up with this massive move. Once we got that red dot on the 9-day and it was confirmed, it did indicate the top of that run was in, and then we did continue down for quite a long time. This was actually a 50% drop to here. That was after a 300% move. If we go back to the cycle before that, at a similar point in the cycle, this is the 2015-16 bull run here. We formed the bottom of the bear market. We came up here after this green dot. And then once we got that 9-day red dot here, and it was confirmed, it did indicate this was the temporary top here. And we had a 25% correction from this high, what we looked at in the previous charts. And it was more of a prolonged correction here and consolidation. Each one of these candles is 9 days, remember. And just to show you why I'm using the 9-day time frame, if we do go to the 8-day time frame, we saw we got a red dot here, and this wasn't the top of this run. We had a green dot after that. So the 8-day wasn't reliable, just looking at a single red dot to pick the top. And that's why we're using the 9-day. So we do have this 9-day dot that did appear. It appeared on Friday. So we are several days into this candle. For this red dot to be confirmed, it needs to still be there by the time that we open Sunday's candle this coming Sunday. So only in a few days. And again, if this does get confirmed, it's an extra confirmation that I think we do have a pullback back to this 25-23K level. And also that we do spend some time consolidating before we do make that new high in this bull run. We do have to wait for confirmation. If we do get a nice move to the upside and this red dot disappears, then all of that is cancelled and we look for the next red dot confirmation. And that will be where the more bigger pullback happens. But again, we have until Sunday to make this red dot disappear. We can go down to the daily time frame now. As we can see, it's pretty choppy here with these green and red dots, so less reliable signals. Currently, we do have a green dot. It's not confirmed until tomorrow. The 2-day is also quite choppy here with these dots being unreliable. We did get a red dot and it was confirmed on Wednesday. The 3-day also had a red dot back on the 19th of April, confirmed on the 22nd. We don't have any green dots yet. And the 4-day is similar. We got that red dot on the 19th of April. It was confirmed on the 23rd. No green dots present yet. The 5 days the same. And the 6-day. And even the weekly had the red dot confirmed at the start of this week. We are seeing bearish signs on these higher time frames here. And I think we need to cool off back to these levels and spend some time going sideways pretty much until these indicators can cool off a bit. But I think that's about all. The main thing I wanted to point out was that 9-day green dot. Again, waiting till Sunday opened for that to be confirmed. And we would need to see a move to the upside before that for that red dot to disappear. But this is the last nail in the coffin for me. If this gets confirmed, then I do, with a high confidence, think that we come down to at least 25K, possibly to 23K. And then I do think we spend a long time consolidating sideways. But that's about all. Hope you enjoyed that analysis on Bitcoin Mamo. I'll see you next time. Bye.